Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey, good morning. David Bourne here, Zacks strategist coming from sunny and right now very hot California. And right now it's hot pretty much everywhere. We're right in the jaws of summer, and that's what my top stock pick is about, what we want to do in the summer, and that's go swimming. Pool Corp is the nation's largest distributor of pool equipment and supplies. And like me, you could be forgiven for not understanding just exactly how big that market is. Pool Corp sells $5 billion a year worth of pool equipment and supplies. Now there's a few other businesses, a little bit of irrigation, a little bit of patio stuff, but it's mostly pool stuff. Now, last year during the pandemic, about 96,000 backyard pools were built. It's a 25% increase over the previous year. And it represents a huge investment on the part of 96,000 families. This year, the estimates are that there are going to be 110,000 pools built. So we're looking at over 200,000 new pools over a 2-year period. The pool business is a great business that you would never think about because it's almost like an annuity business. When you put in a pool, it costs a lot of money to build. Superior and Pool Corp will sell you all the equipment that you need to construct a pool, the plumbing, plaster, tiles, everything. But then once the pool's in, the expense doesn't end. You have to keep paying pretty much in perpetuity to keep that pool operating. And that's where the real glamour of this business is from a financial standpoint. So the sort of dirty secret in the industry is that everything on a pool breaks eventually. People out there that have their own pool probably know what I'm talking about. There's equipment that sits in the sun. It gets hot and cold. It pumps chlorinated and sometimes salinated water. It's a recipe for everything breaking sooner or later. And when it does, they have to go to Pool Corp and buy the new equipment. So I'm going to turn that into a financial story. If you look at the sales estimates, right now it's $4.9 billion this year and a very modest increase of only to $5.2 billion next year. And I think that's pretty conservative. There's been a shortage lately of chlorine tablets. There was a fire at a plant in Louisiana that manufactures apparently 70% of the chlorine tablets in the whole country. I was surprised. But they've gone up in price and people have been hoarding them. And just like toilet paper a year ago, it's hard to get your hands on chlorine tablets. Price has gone way up. Pool Corp can pass those kind of price increases along directly to consumers because the consumers don't have a choice. You want your pool to turn green or you want to pay the higher price for chlorine. So unlike some businesses who have a hard time passing along wholesale price increases, Pool Corp just sends it right down the line. The other aspect of that is that there are other ways to chlorinate a pool besides with chlorine tablets. And so there is equipment you can buy for between $500 to $2,000 and up. You can turn your pool into a saltwater pool, and it makes its own chlorine. You put salt in the water. We don't have to do the high school chemistry lesson, but it splits the sodium from the chloride, and it becomes free chlorine that sanitizes your pool. So I think a lot of people are going to be doing that. And where are they going to buy their equipment? They're going to buy it from Pool Corp. So I think that the analyst, this is not a cheap stock by any means. It's not cheap in terms of dollar terms. It's over $400 a share. It's not cheap in terms of earnings multiple, right? It's a 45x forward PE. But I think that the estimates for out into the future are really conservative. And I think the analysts might be missing the fact that all those people that put in those 200,000 pools are going to be spending a lot of money going forward, and most of it's going to go to Pool Corp. So that's what makes it my top stock pick of the week. It's a summer pick. It's an easy pick, and it's a guaranteed annuity income for a company that sells something that people not only want but really need. All right, over to you, Jeremy.
Hello, everyone. I'm Jeremy Mullen here today for our top stock pick segment. Today, I will be doing Ulta Beauty, ticker symbol ULTA. Ulta is the Zacks #1 strong buy that is a leading beauty retailer in the United States. Ulta sells more than 25,000 products from about 500 well-known brands across all categories and price points. These products include cosmetics, fragrances, skincare, hair care, bath and body products, and salon styling tools. Ulta is headquartered in Bolingbrook, Illinois, and was founded in 1990. A big issue with the stock this year has been All-Star CEO Mary Dillon and her departure from the company. Since Dillon took over in 2013, Ulta has thrived. The company doubled its network of stores and saw growth that took its stock price from $80 in 2013 to $340 today. While investors are disappointed with Dillon's departure, they need to look forward and focus on Ulta as a reopening play. As the masks come off, the beauty products will go on, and the recent quarter proved just that. Earnings. Ulta reported earnings late May, seeing a 113% EPS beat to the upside. This was the fourth straight EPS beat and the eighth over the last 10 quarters. The company also got a fiscal year 21 higher and is now seeing $11.50 to $11.95 versus the $9.91 expected. Ulta plans to open 40 new stores in 2021 and raise its same-store sales for the year to 23 to 25% from the 15 to 17% prior. New CEO David Kimball commented in the quarter saying, "We have emerged from 2020 with strong momentum in our sales trends, market share gains, and consumer sentiment. Consumer confidence, relaxation of restrictions, and the desire for newness were all cited as major reasons for the increased engagement in the beauty category." So while Mary Dillon is leaving, there looks to be a seamless transition into the new CEO role and continued momentum in the business. Now, looking at some fundamentals, the current market cap is about $18 billion, and the stock has a forward PE of 28. The PE does give Ulta a Zacks style score of D in value, but the stock has the scores of A in both growth and momentum. Over the last 30 days, earnings estimates have surged. For the current quarter, analysts have hiked estimates 19% higher. And for the current year, we have seen a 25% move higher over that same time frame. Because of the great quarter, many analysts also took their price targets higher. Telsey Advisory has outperformed at a $400 price target, UBS a buy in a $395 target, and Oppenheimer an outperform in a $385 price target. Now, let's look at the charts and see how we can get to those targets from those big analysts. Okay, here's the chart going back to 2019. You can see at the beginning of this chart, we had a bad earnings, which took the stock down, but it hung in there until COVID. And we saw the COVID crash down to the 124 area. And since then, we've had this nice trend line higher that, for the most part, is pretty much held. Now, drawing a Fibonacci retracement from the pre-COVID highs to lows, we got the 61.8%, which I was eyeballing for a break higher. We finally got that breakout, and I've had 415 targets ever since. So let's zoom in on this chart, and we can see some moving averages, and we'll go over here's a trend line right here, which has held, and the 50-day moving average, which has been a point of support, but has given way a couple times. But we can see recently that we had the earnings move higher, it has held again, and now I'm looking for this break higher, and I actually have another fib from the post-earnings highs in March to lows. If we can break higher, we can get 403. So I'm looking at 400 to 415 area as a target for this stock. And if we do see some market weakness, some overall market selling, watch out for this trend line, this 50-day moving average. If this holds, that shows very nice strength. If the market pressure was too much, watch out for the $285 level. That would be a spot I would want to get long term. And if that can't happen, I will look for these targets in 400 area pretty shortly, perhaps before next earnings. Okay, that's it for me and my top stock pick. If you like what you heard today, go to Zacks.com/promo to check out stocks under 10 with Brian Bowen. Thanks and have a great day.